All right, we're going to cover the failed breakout system the week ahead of December 22nd, which will be Sunday evening. We start trading live futures and currencies. And one thing I want to point out, if it's not obvious to everybody, this is a holiday week. And traditionally, except for 2018, which was an anomaly, the holiday week of trading is the Christmas holiday in the United States, is the least volatile and least volume market out there. What I want to say is everybody who has a desk job at a bank, at a firm, at an institution, or anything like that, they're on vacation. So the big people who take the big positions in the markets rarely are being taken this week. So what that means is it's just the traders here. And as I like to point out, we only represent about 4 to 5% of total volume in the market. So what that means is next week, if you're trading normally 10 contracts of the Russell or something like that, and it has no effect on the market when you buy 10, this week, this Christmas trading holiday week, it will have a big effect. You will move it around, you will cause all sorts of things, because the other person at the other end of that trade is maybe trading, one big contract, or maybe 5 micro contracts, or even 1 micro contract. So understand that what you can normally get away with in a normal trading market is not available in this market. So let me kind of start out with some of the news this past week that I think is significant. And the big thing I want to point out here is that, starting with, I guess I should say, let's start in Europe. The Eurozone had some economic, kind of the thought had been that the Euro had been doing, let's get a Euro up here. It might be 7. Yeah, there it is. The thought was that the Euro was kind of out of the woods, and it was starting, this October rally was the first indicator. We had a higher high above that one. We had a higher low. We had another higher low. We held these lows, and we put in a double bottom, and we moved, and we put in a new high in this range. So higher highs, higher lows. But this week, they kind of started to realize in the Eurozone that, hey, things are not really as good as we thought they were. And if you were trading that, you get short here on your failed breakout setup. And the only reason I'm starting here is that you get short the Euro and you move down, you're already up 1R. Things aren't as good as expected. And you have market regimes where you can see this is just straight down. This has just been going down. And when bad news hits, it hurts. Good news may bounce a little bit, but it fades. Bad news fades. So when you start to get good or bad news that gets bought, then things are starting to be interesting, right? So that's kind of what was happening this last quarter in the Euro. And then this past week, it really started to look like maybe we're not out of the woods. Maybe it's not as good as I thought it was. And oops. So that's kind of what's happening in the Euro. And I wanted to start out there. The next thing I wanted to do was take a look at GBP. What is the pound futures? I forget the 6B. Yeah, there we go. Okay. So as you recall, we had that big bounce out of that low volatility we talked about. We talked about low volatility for the past month, and then as it came into the Brexit and the election, it ripped. It broke out of that, and it looked like we were going to get a failed breakout. It failed, got a massive move higher, and then that thing has since failed all the way down here. Personally, I am short the pound. I have been since this first setup. I'm short the pound by the GBP USD cross in FX, but it's still something that you can trade in the other markets. I know that there's a micro contract, so there's ways to structure this. You can also trade it by FXB, which is the the options, though. This is why, or not options, but the ETF. This is why I have a tough time trading equities, because it just doesn't. You don't have the clean setups that you have with a 24-hour market. Like this is the actual trade I took here. So breaking down, and then on Friday, right at the close, Boris Johnson basically says, yeah, we're out of here the end of January as planned, whether we have concessions, whether we have everything aligned and set up with the European Union, who cares? We're done. We're gone. And then, for the last, let's take a look, the last hour of trade, we were kind of getting that rally, and all of a sudden that came into the market and it just blew down. So actually closed below 130. So the closing price, 129.9947. So a little bit below 130. That might be something for looking on the open on Sunday. That might be there. The next thing I want to come into and discover is, let's just take a look at the S&P. The next thing I want to talk about is there was big news in the United States this week. Really big news. And if you are like a news person and really are into politics and all those sort of things, you know that President Trump was, the House voted to impeach President Trump. And you would think that something like that would it affect the market. Just the headline itself would affect the market. And it didn't. And I want to point that out because we're in a bull quiet regime. We know with the SQN indicator, a bull quiet regime means bad news is absorbed and seen when it doesn't drop on bad news. Traders see that as an indication that, if you rally on bad news or you don't drop on bad news, that's super bullish, okay? So being in a bull quiet regime ourselves, you'll notice that anytime you have bad news, it's very short-lived. We had a little bit of a kerfuffle right around the Thanksgiving week and immediately after. So maybe people went home and got angry at each other on politics or something. But it just has been straight up ever since. And it's not just the S&P, it's not just the Dow, especially aggressive in the NASDAQ, as you can see, not even hardly a blip. Where it is weak is, and the reason I'm kind of blowing through all of those because they're the same chart basically. But where the weakness is, actually let me compare. I like to stand this one back. We're at all-time highs on the NASDAQ. We're at all-time highs on the S&P. Catch up. You're not going to catch up. Okay. And we're at all-time highs on the Dow. But we get into the small caps and the mid caps, Russell and the S&P 400 mid cap. Let me show you. We are definitely not at all-time highs. We have finally broken out of this trading range, this sideways range that we've been in for pretty much a good part of 2019. I could even go lower there. But the obvious range is right here. So we've broken out of that range, and as you can see, we broke out, came back, tested it, hit that midline, and we moved higher. We are now in a bull quiet regime on the Russell, and as far as what is available on a measured move, 1249 to 16. Let's just call it 1600. So 1250, 1600 is 250 points. So 250 points from 1600 is 1850. Puts us at an all-time new high on the Russell. So what I want to say is I am bullish Russell to 1950 target. We're in a bull quiet regime. So I'm not even going to be taking shorts, even on daily setups that look like this. I won't be taking these shorts anymore. It has been magic trading the Russell all year long, just long and short, long and short, long and short. It's been great. But we are now in a bull quiet regime. and we're moving to, in my opinion, we're moving up to 1950. So we're going to want to, 1950 is my target. We're going to want to be long, and any pullbacks, especially to midlines, we're going to want to add to our position. So I'm currently long. I'm currently long from, I think, right in this area, the 1620 area. So I'm up on a nice move on that one, and I'm looking for further for the move. As you can see, I want to talk about this price pattern here. We broke out, closed outside, good. There was a potential failed breakout setup, and it worked. And you catch 1, 2, 3, 4 R here. The thing is, all the other indices were in bull quiet, so this slope is really high. When I had this reversal candle, like, I was super happy when I was getting out, exiting here, thinking, oh wow, we're really falling apart again. We're going to do another one of these numbers on Russell. And then bulls came back in, and I said, okay, I'm getting long. We have a vol breakout setup that pulled back. This is textbook get long, so I get long here, and it's moving in my direction. So I'm looking for another way to pull back. We have this reversal type candle up above here, so maybe we get some pullback this week on the holidays, and then I'll be looking to get further long as we progress. Then let's get into, let me go back to, let's go to mid caps. And the Santa Claus rally, I put out a video on macro ops. We put out a video on Santa Claus rally seasonality. So the actual trade on the Santa Claus rally happens on the day before trade, the last trading day before, so it'll be here, December 24th. So this is the Santa Claus, that's the Santa Claus rally quantified. If there's weakness, especially if there's weakness, you'll be wanting to buy on Tuesday. So we're gonna get Sunday night, of course, we're gonna get Monday trade, and then we're gonna get Tuesday trade. So if something like this were to happen, I have a drawing tool here. Yeah, well, if something like this were to happen, on whether we're talking the EMD or anything, I would be looking to buy there, and I'm not, you know, that's not to say that if you're looking for the Santa Claus rally, and that'll be into, what is the first trading day? Is it I think like here, probably something like that. Is probably what we'd be expecting on the Santa Claus rally. It could definitely just rip. It could do, you know, something like that, but that's generally how the Santa Claus rally do. I'm not, you know, that's not a setup that I'm actually trading, but everybody talks about it, and I want to get that information out there as much as I can. So let me get into where I'm seeing in kind of, we did our measured move on Russell. This was a 2950, 2320, so 625 points. That puts us at 3575 as our measured move target. We are in on the S&P, so bull quiet regime, longs only, measured I say 3570, yeah, 3575. So 3575 is my measured move target on the S&P, and I'm not saying we're going to just, you know, rip to that point right there, but what's important is I'm only taking long trades. We are in a bull quiet regime, and as I pointed out, bad news doesn't get sold off, and if it does, it doesn't last long enough. So you beg for bad news in a bull quiet regime because that allows you to buy dips. You are buying dips and you're not selling your rips. You are adding to your positions. And it could take 3, 6, 12, 24, 36 months to hit that 35.75. But at this point in time, I'm trading in a bull quiet regime, and sure, we may pull back to 3,000 or somewhere 20, 27, anywhere we can pull back and move out of the regime, and that's fine, and I can start taking shorts and everything. But for the longer picture, that's where I'm expecting. So for now, I'm thinking probably 32.50, 32.80, 32.40 is probably going to be a top, and we kind of mellow out a little bit. But with that being said, we can still move to, if everybody is still bearish and people are still have cash on the sidelines, this has a lot of potential to move. So I'm not taking profits on any of my positions in there yet, especially as we traverse into the bull quiet regime and further into it. I'm going to stick with that, and even on day trades, no shorting, because the hour or the daily is in control. This is the environment. This is the market regime that controls everything else. So on my day trading of the Russell or on NASDAQ or any of those others, I will not be, I won't be taking shorts no matter how good they look, because the juiciest, best shorts in the world fail. So that's where I'm at on the S&P. Let's get into bonds. First off, this is a. I want to take. Let's just go back as far as we can here. And we're putting in this long trend that has just been running and running and running and running and running and running and running. Finally, we got a little congestion in 2016. We're coming up, and I believe we're putting in a lower high. And you could also call this maybe, I don't know what you would call it, but I would say I am currently bearish on bonds on the weekly. This could be a bull flag. I believe it's going to start the trend lower, and we're going to spend the next decade drifting lower. As you can see, we've moved from bull quiet, where everything just kept going higher and higher and higher, and we get into bull volatile, which is where we usually get tops. You can see a nice long bull volatile. That's where tops come in. That's how we do tops. So I don't trade bull volatile the same way I trade bull quiet, and I don't trade bear volatile the same way I trade bear quiet, or bull quiet or bear quiet, or bull volatile, bear volatile. So tops tend to take a lot longer to form on a big market like that, whereas bottoms happen quickly on big markets like that. You can see we flipped into a bear quiet, bear neutral market here. This is just trending lower. So now the thing about being in a bear quiet, bear neutral is, unlike bull quiet, you can buy these. You can go long a bear quiet market. So we didn't quite get, we got a failed breakout, but we didn't get the failed vol breakout. So a trade that could be done here, and I'll be looking at next week, is taking a bounce on, taking a buy on bonds. And given that it's Christmas, I may not go, but I may just kind of take the week off. I'll be at the beach. And that's a fairly profitable trade. Failed breakout, not a vol breakout, but it goes down, spikes low, and so then you have bulls. They get long this thing, and they put their stop below that spike low. So that goes up, and then it's just inside day, and then all of a sudden you get a spike below that. So it artificially triggers those stops that bulls had, and so they cover they sell their position, and that artificially spikes it. So the rebalance of that brings it higher, and that also signals that bulls are coming back again. So they got stopped out, and then now they're like, I missed it, I want to get back in. And bears here have possibly covered. because they break below that, they're looking to take profits. Now, if we can get above this and this one, we could have another move just to the midline. So I'm going to call this a neutral market. Longs and shorts can be taken. Looking for a failed VBO or so we're looking for the mean reversion trades here more than anything. As we bring it a little closer, we can see that longer trend is there, but we definitely are bouncing and dropping and dropping and dropping. So this would be a nice long trade. I'll go ahead and take a look at the 10-year just to compare. And a similar scenario, we put in a nice long topping area here, and it's definitely, now this could be a bull flag, and we could try a little higher. But on a tactical trading level, I would be looking to get long either the 10-year or the 30-year. And it looks like the biggest risk reward potential is probably on the 10-year. So I may take the ultras. Let's take a look at the ultra 10. Maybe not so much, and then the ultra 30. A little bit better on the ultra 30. So whichever one we decide to go with there. We could probably take a look at the 5s. I just want to take a step back. Not much. 2s, even more lame. So as you would expect, the short term is more sideways than anything, whereas the longer term people are taking their bigger bets. On to oil. Now, we have barely spiked into a bull quiet. I want to come back to the weekly. And it's just that, it's that tight range. Don't need these anymore. This is the weekly chart. And as you can see, it's just sideways. We had massive moves down. In 2014, we gave up that 100 mark. Down to the 30s, 20s even, I should say. And so what's, 110 to 25 or so, right in this 80 range to 60 range is probably the midline of that. And more importantly, it does have a slight upward trend, but this to me is a sideways trading range. And when we realize that we're looking at a couple of years, this is an entire year of nothing. So with all the drama of getting bombed, the oil refinery getting bombed and giving all that up, that was just a big indicator to me that we're not in a trending market, even though this is trending and it is potentially bull quiet. My bigger picture is that we are looking to be, I need to be convinced. So I'm calling this a sideways regime, mean reversion trades, long short. Okay, we are getting higher highs and higher lows here. That's true. So the next time we hit this reversal here, this failed breakout reversal, that's a big candle. If that fails and we move higher, that's an interesting thing. We are kind of in this bull quiet area close to it, and that's starting to look like bull quiet, but I need to be convinced. I'm going to add the I need to be convinced we're in a bull quiet, and I'm going to do that. I'm going to need that on a weekly scale, because you can see this is a failed breakout, not even this is a very highly compressed volatile market. So for the last, since September, so the last 3 or 4 months, it's been very compressed volatility. We can go back even further, back to the summertime. Pretty much it started back in March to be really obvious that we were in a sideways market here. And it became just a joy to trade this thing. This is Saudi Arabia. You can see that that's barely a glitch. And then we IPO'd Saudi Aramco. So not much going on there. For me, I'm looking to sell the rips, buy the dips. I'm actually trading this more on a shorter term time frame. I like the hourlies and the 4 hours. Having a look at Natty, it attempted to get into this bull quiet regime, and it was looking good, and it just gave it right up. So let's go back and take a look at our weeklies. Sideways, we had this unwinding and blow up of a fund, I believe, pretty big fund. And once that was done, we were back into that trend. And the trend is just drifting lower. And as you can see, fail buy dips, sell rips, buy dips, sell rips. We're in that sideways regime, and it's looking to continue to go lower. So when we get it down to the more tactical daily levels, again, I like to trade this on dailies. I like to trade this on 1 hour and 4 hour charts. As you can see, we're getting some good moves here. Sometimes we get head fakes, we get stopped, but we catch a great one. So this was a really big head fake. I got short, got stopped out, got another short, and then you catch that big move. Same sort of thing here. Looked to get short, got stopped out, another big one, and falls apart completely. So that's kind of the rhythm. Failed to, that was a decent trade, got in 2R, 2, 3, 4R, something on that. That fails, and then another attempt, and then now it looks like it's tempting. So I'm going to call this one I'm going to call it sideways mean reverting market, buy dips, sell rips. And that's how I'm going to be taking that's how I'm looking at trading natty gas off to the metals. Not much going on. This is a dead market right now on gold. You can trade this intraday. This is more of a so for me, I'm looking at trading this intraday, 1 hour, 4 hour candles, maybe even lower time frame, and just banging around on mean reversion trades. Nothing exciting there. There's no trend. This is an absolute sideways trend. It could be, could be a bear flag on a longer term. That's totally possible. And when that changes, I'll make a change. But as far as my trading and my time frames go, I'm not looking to spend too much time doing that. Now, copper got interesting last week. We are in the beginning of a potential bull quiet. Let's take a step back and look on the weekly. And very much sideways action. With China starting to sound a little bit better, it's interesting to watch how copper's trading. We have a potential fail breakout on the weekly. Let's get to our daily, kind of more tactical. That's an uptrend, higher highs, higher lows. We're putting in a potential complex top. So if we fall back and don't continue this nice uptrend, I'm going to call this a mean reversion market. I would be interested in getting, this whole area in here short, ballparking on a tactical basis. The actual trade would have been here, got short there, move up, and so this is the actual trade itself. Still in that trade had it been taken, but right now, looking for a failed breakout. So I'm looking for a move back to either a failed breakout and a move back to a mean reversion market, up, down, up, and down. If that doesn't happen, so I want to note, if that doesn't happen, we move into a bull quiet and long onlys. So for now, long short's fine. For now, long short's fine. I'm looking for initially I'm looking for a move back into here. Long or short is fine. But if that doesn't happen, I should just call it with the correct amount of proper grammar. We're in a bull quiet, and it'll be long only. So a bit of a decision point going on copper. Taking a look at silver. Same as gold, in my opinion, not much to be seen there. Regardless of what your opinions are on it, as far as trading goes, there's nothing to do here other than play it as, you know, mean reversion, shorter term, long, short. So until something happens, we were in a nice bull market, and it, as you can see, we topped out here. Once we became bull volatile, that's a great place for a top to happen. That was an obvious top, and we've just been drifting lower. So we can take a look in the longer term if you like. I don't think I'm going to be. I'm not convinced that I mean, this is a nice up move, but that's fine. You know, we've had nice up moves that did nothing before. So I'm not looking at anything other than mean reversion trades, shorter term, buying dips, selling rips, and taking profits early. Take profits early. You know, my old saying is take profits when you can, not when you have to. Let's look at platinum. It put in an ugly day on Friday, and that's a nice mean reversion. This is a failed breakout, failed vol breakout right here, and I missed that because I had too many other positions on. I couldn't add any new positions, and this one worked out just nice. So pretty textbook. The thing about it is, yes, it says we're in bull quiet, but when I look at the chart, we're sideways. We're not bull quiet. It's a lot of sideways action. Take a look at this is something that is challenging for a lot of people to catch on, but take a step back and look. Is it clear that you're in a bull market? No, it looks like we're just sideways. Even if we are having, you know, a period that says we're bull, you know, big up move, down, up, you know, but we had higher high, lower low, lower high, lower low, lower high. Now we would expect a lower low. So even though this is saying SQN bull quiet, it is not. And that's what I mean by, if you're in a bull, if the SQN is saying bull quiet and it fails, you're not actually in it. So you need to not only quantify it there, but you need to know price action and understand. So this is in a mean reversion. Look to, you know, failed vol breakout, sell rips, buy dips, be long and short, intraday fine too. So what I mean is that we're in a mean reversion market, so we're looking for failed vol breakout trades. Closes, attempts to do it, gets a nice tight inside bar. You can up your position size because of that size of the bar, down, and then you're hitting targets pretty easily. On these, you want to take profits early. You don't, on a mean reversion market, you do not want to add to positions. You want to take positions off as they go in your favor. Now finally, I want to take a look in the metals at what we have in palladium. This is a bull volatile, and that is confirming a market top. You had just this massive run, 1600 to almost, well, to above 2000. 2000 is one of those magic numbers. You hit 2000, you have a magic number that everybody thinks is important, and so a lot of people take profits. If it hits 2000, I'm out. You know, especially people who got in back in September at 1400. And they've ridden this whole thing out. They may be the ones that didn't sell here, and they're just like, yep, no. And you'll notice that it was right in this, you know, 1800 area that people started to get weak, and we had a bull volatile regime, so that signals market toppy. You can see that it starts banging around a lot more when we have that, and then when it's in this olive color, it's more of a trend. So what happened here? Topping pattern, failed breakout. It's not a vol breakout, but a failed breakout, and then it just moves, and it moved aggressively. And that happened with a bull volatile regime. So that's typically when tops are in place. Now, they can last a long time. As you can see, that move from 900 to, you first started to get a real top was about 1400. So, and it didn't actually top until 1600. So it could very well be another move, but I would say 16, 17 down to 1 to 60, 357. Measure move has us up to 1914 on the right in here. So we've gone above. We've went parabolic. We went above our market top. Measured move higher, and now everybody's taking profits. So market top above measured move target 19. Let's just call it 15. Bull volatile heavy selling price action confirms top. So what that means, that may not actually be the actual top, but it is, and my friend Ethan actually called it right here himself, top ticked it. It may not actually be the market top. We may bang around, do other stuff like that. But what I'm saying is we've done our measured move above 1950. So if we were going to rally in a measured technical format, 1900 area would have been in the place that we would have expected to get to. We've moved into a bull volatile regime. You can see the price action is confirming that. The heavy selling is saying, hey, this is real. We're topping. So it happened over here as well, but we had not reached our measured move yet. So there were still bulls willing to do it. At this point in time, there's not a lot of people who are saying, hey, this thing has a lot to go to. If we were to take a step back to a weekly, maybe we could see a little clearer what if there was any additional measured moves. And I don't see any additional measured moves that would signal that we're at topping. And you can see we've been in bull volatile since 2017. That's a parabolic blow off top. That's how it happens. So no longs. I want to say no speculative longs, because people just want to, they see that and they're like, I got to get on this massive trend. We finally had a pullback. And then this is probably going to be a no man's land. This is going to be a no man's land trade for a while, or look for downside trends. So we could once we top, now we're in a no man's land trade area, but once we top, we could very well just start that downward trends. I'm gonna go ahead and take a look at the ags real quick. I don't trade these much. Sideways, I would be selling rips, buying dips on corn. On soy, this is a volatile market. It looks to me, as always, this is more, there's China news, I get it, but this is more of a mean reversion market, so I'd be paying attention there. The bull quiet, bull volatile, all those different things are not in effect yet on this. So all the ags, in my opinion, we're just looking, except for oil, soybean oil. If I can get my data to download. We have hit a bull volatile. This is a bull quiet. You can see that has been a nice trend, and we went parabolic. I'm going to take a step back at the weekly. Okay, as you can see, that looked amazing as it was happening, but when you take a look back and put it in perspective, we're just bouncing off the bottom, and it's starting to put its own, low, higher high, higher low with a parabolic blow off there. I'm not calling a top on that, but it is definitely bull quiet. Buying dips have been good. It hasn't been too quiet though. It's banged around a lot, and that's how the ags trade. The bean complex is volatile. We had a failed breakout that failed and really blew off. So that could signal that we are in a bull market on beans. On bean oil, I'm sorry. So it might be worth paying attention to there. I already did wheat. Let's look at meal. Sideways. Okay. And then finally, I'm going to go take a look at Bitcoin. And we are in a definite downtrend right there. It's more useful to take a look at the weekly, in my opinion. As we know all about what happened from whatever it was, 900 at the beginning or something like that. Yeah, I think it was 900 to 20,000 and back. And yeah, we're kind of like right in the middle of that. We're at about 900 to 20,000, somewhere around, from 7 to 12 is going to be our range, in my opinion. Though that is a nice downward trend. Bears are in control on the weekly. Bears are in control on the daily. You can attempt to get these in a bear volatile regime. You can trade both directions, but understand that you're taking profits earlier in the shorts or in your longs, and you're probably going to capture longer downtrending moves on the short side. So I wouldn't be looking to get, there's trading in here, but not much else to see. This week, trading is very abbreviated. We end trading on Tuesday afternoon, and we resume on Wednesday evening. But it will be very light volume unless something happens in the world that causes people to log into their Bloombergs from wherever they have barely any internet. So it's going to be a tough one. If something happens, nothing's on our radar like it was last year. So it'll be a fairly tame week. My idea is I'm going to monitor, but I'm probably not going to be taking too many trades. And if I do, I'm going to be trading much smaller position sizing because I've put in an amazing 2 months, a great year, but a great 2 months, and I don't want to give it up in the last part of the year if I have no edge. And knowing that volume is going to be a lot lower, you're going to be trading against other traders, and the best traders are probably not going to be there, so you're going to be up against a lot of people who are just gambling. And so I would be probably a lot more cautious in any trading this week. I think we have crude inventories at the end of the week. I think we have Neruda speaking in Japan towards the end of the week, and then maybe GDP or something like that in Canada. Otherwise, nothing else. So we may have news headline risk, tweets. They may do the impeachment thing in Congress, try to sneak it in while everybody's on holiday. Who knows? Boris Johnson could put more activity in the UK while everybody's away. The thing about it is when nobody's around, there's oftentimes things that sneak through the headlines. So even though something may get snuck in through the world, if nobody's there to report on it, did it really happen? Much like Instagram. If you didn't gram your meal, did you really eat it? Okay, that's all we got for this week. That was a long one, and I want everybody to have a great holiday week. Take a break, study this stuff, subscribe, like, ask me questions. You can follow me on, you probably have. I'm most active on Twitter at Chris D Macro. Comment, like down below on the video if you have any questions on this stuff. I'm trying to show my process along the way to teach my system along the way while I use it. So I'm not here to do anything other than that. I'm not trying to convince you to buy or sell any of these assets. I'm not trying to get you to be out of gold if you're in like none of that. It's just my perception and how I read this stuff. And I hope that you can take that and make it your own from there.